Hey, good morning. Let's go over today's trade plan. In the overnight session, the market has been balancing within a range, and we know that over the last few days, the market has been quite range bound as well. So heading into the open, our short-term bias is going to continue to be neutral, and we are open to a move in either direction. On the downside, we have initial support at 45 to 48, and we would have to see broad market weakness and some sustained downside momentum in order to break below that area. A break below 45 to 48 would signal the sell side dominant and in control on the smaller time frames, and it could quite easily lead to a test of 36.75 to 39.25. Now that is still a valid area of support, and responsive buyers can be active there on first test, especially if the market is exhausted into it. But we'll just have to keep in mind that on the smaller time frames, the sellers are going to be more dominant, so we would have to time the entry a little bit more appropriately and only get involved on the long side at 36.75 to 39.25 as long as the reward to risk is still there and the market is not completely breaking down and the other markets are not completely in liquidation mode. On the upside, we have a little bit of resistance here at 52.5 to 53.5 with the previous close, previous VPOC, and the HVN. A breakout above 52.5 to 53.5 would quite easily bring the overnight high and the 23.59 HVN into play, and then on the upside we have resistance at 60 to 62 with yesterday's high at 63.25, and in order to break out beyond initial resistance and yesterday's high, we would have to see broad market strength, sustained upside momentum, and the other markets also participating in the upside. Beyond yesterday's high, 65.25 to 67.25 is technically valid resistance, but we will have to see how that zone gets tested. If the market is exhausted into it, it's still an area where sell side can step in. But if we balance ahead of that zone for a couple of hours and then break out heading into it on some decent momentum, in that scenario, the zone would call for caution and may not hold. Beyond 65.25, 67.25, we have the naked VPOC at 71.5, and then last week's high at 73 to 75, and sell side can be active there as well. So heading into the open, our short-term bias is going to continue to be neutral. We have to be quite nimble and flexible with our intraday bias because recently the market has just been balancing within a range and the price action has been very two-sided. So if off the open we are not seeing any signs of some short-term directionality, then we have to be patient and only get involved in trades where we're getting good trade location. Now on the downside, if the market does go directional and the other markets start breaking down and the momentum is bearish and the AD is quite bearish, that would actually offer us an opportunity to short the market. But in the event of a upside move, it may be more difficult to get on board because even if the market, let's say, puts in a wide range bar going up towards 59, at that point ES would be exhausted and also heading into resistance. So trading the long side is going to be more difficult unless we're able to secure good trade location. But on the short side, if it's a breakdown type move, considering that ES has failed to break out for the last several days, we could still get positioned at good enough location. It doesn't have to be amazing, but if it's a breakdown, it'll probably be easier to get positioned. And if it's an upside move, then we need to be a little bit more conservative and more aware of trade location. So let's continue to be flexible with our intraday bias. Let's see how the market develops off the open in real time. Keep an eye on the other markets, NASDAQ and the Russell. Those can often be quite helpful and provide a bit of a heads up if the markets are going to go directional, and we'll take it from there.